We can all feel it right now as we watch this market. There is a big change going on. The charts are going crazy for Ethereum. There is a lot of liquidity coming in from everywhere, and everyone in the crypto space is getting ready for what could be the biggest shifts of the decade. And for people who own both ETH and XRP, it's not just exciting, it has a history. We might be seeing the start of a moment that changes the balance of power in crypto for good. This is not advice about money. Ethereum has broken through barrier after barrier. It recently broke $4,000 and is now sitting near $4,200. That move went above and beyond Tom Lee's old price goal. It wiped it out. Wall Street is taking part. Funds are starting to flow. Staking is getting bigger, and more money is flowing through the pipes than at any time in years. But here's something that most small buyers don't know yet. Even when Ethereum is the talk of the town, the other altcoins don't just follow suit. It goes off. And XRP is right at the front of that line. Before we talk about how that rotation could set off the next huge XRP rise, I want to tell you something that will help you understand this whole situation better. You can find the XRP Millionaire Blueprint in the comment that has been saved below. A full explanation of how the biggest liquidity cycles start, how to spot them early, and how to place yourself before they get going. It has the whole document, images, and video training that were made to show you the exact system that the best investors use. Check it out in the comment that was pinned while you still can. Let's talk about what's really going on with Ethereum and why XRP is in a great place right now. Institutional capital is riding the ETH wave right now. Hedge funds, banks, and whales are all moving in sync and using Ethereum as a way to get into more cryptocurrencies. They ride it up, make money, and then move their cash to the next asset with a high upside. The market has been going through this trend for a long time. If you zoom out, you can see it happening again, just like it did in 2017 and 2021. Not long ago, Tom Lee said that Ethereum is having its Bitcoin 2017 moment. Wall Street now has a safe way to play crypto that is fully legal, fully auditable, and already has ETF pipelines in the works. The success, on the other hand, makes the next move possible because institutional money doesn't go back to dollars when its ETH run is over. It's always on the lookout for the next chance, the asset that has the best mix of use, control, and ability to grow. In this case, XRP comes into play. Remember that the setting in December was the same. Ethereum reached a key level and then stopped moving. Within days, money started coming into XRP in a steady stream. The market was very active. The background is much bigger this time. ETFs, infrastructure that is compliant, pilots for tokenization, and on-chain liquidity corridors are all ready to handle real institutional traffic. Tom Lee also said that the way ETH's treasury works, with large companies keeping and staking Ethereum as reserves that earn interest, is similar to what MicroStrategy did with Bitcoin. MicroStrategy locked up 3.2% of the coin supply in just 5 years. Think about what would happen if that same thing happened 12 times faster for ETH. That's what caused the present spike. Wall Street likes the framework because it is clear, legal, and simple to join. But there's a catch. Ethereum is now the face of crypto that follows the rules, but it's not the best payment layer. Cost, speed, and freedom to grow are still important. Where XRP's technology really shines is in this area. Transacting across countries takes seconds and costs fractions of a cent. This is possible because the ledger was designed to handle institutional-grade liquidity transfer. It is important to be efficient, not just nice to have. This is what world finance really needs. Banks, payment providers, and clearinghouses can't use slow, crowded networks to run trillion-dollar systems. They need to be accurate, quick, and dependable. That's what XRP is made of. Combine that with what might happen next, which is the acceptance of XRP spot ETFs. There are several applications going around, and there is talk behind the scenes that the go-ahead could come as early as September. It will be possible for regular investors to get in on the action through standard brokerage accounts, just like they can now with Bitcoin and Ethereum. That's the key to start the car. Because when the ETF goes live, liquidity doesn't just come in, it grows. Institutional desks see that retail business is going through the roof and speed up their own allocations. It feeds back on itself. ETH saw it. BTC saw it. Next is XRP. Ethereum needs to go up right now. It means that the market is heating up again, money is moving, and people are willing to take risks again. But what's the main difference? This loop is fast. In 2017, it took weeks to do a shift. They took days in 2021. With on-chain analytics that work 24 hours a day, sentiment algorithms, and access to global trade, it could take hours in 2025. With just one news story and one rotation event, a lot of money can flow from Ethereum to XRP before the average investor even starts their portfolio app. That's why the next 30 days are more important than most people think. The price of Ethereum has already gone above and beyond what was expected. If it keeps going up toward $4,500, that window for rotation will open up quickly. In the past, XRP has started to rise when ETH starts to settle down after a breakout. Let's take a look at how that works in general. The staking environment for ETH limits supply, which makes it harder to buy and sell. Traders release huge amounts of capital all at once when they start to take gains. These funds are looking for a new asymmetric bet, something that hasn't been pumped yet and still has a lot of clear regulations and business use case momentum. XRP is a great choice for that. At the same time, Ripple keeps building real-world connections with banks, money transfer companies, and fintechs, things that directly add space to the XRP system. This means that when liquidity comes along, there is a real need to accept it. Well, that's the main difference between hype cycles and planned shifts. The floor is provided by utility. Speculation gives it fire. While Ethereum keeps making news, the smart money is already planning the next step. They are aware that the flow will continue with ETH. They know that the plan for settlement assets that are in line with the law is better than ever. They also know that the time to plan ahead for that reallocation is getting smaller every day. Traders who were early adopters of Bitcoin ETFs and rode Ethereum to $4,000 are now quietly putting their money into assets that can actually handle transactions. And XRP's measures are at the top of that short list. While everyone is focused on ETH, the number of transactions, the number of new wallets, and the on-chain liquidity rates have all been slowly rising. That's what takes place right before a breakout. Also, keep in mind that markets don't move slowly when people's feelings change. They move very quickly. The switch doesn't have a smooth shape. It's very easy. One week, all the news is about ETH. The next week, all the news is about XRP charts breaking through support. It feels like that in real life. And the time couldn't be more perfect right now. The picture being shown by all on-chain metrics and broad signals is the same. The rise in Ethereum is almost over, and pressure to move money out of the cryptocurrency is growing. The same pattern played out at the end of the bull phase in 2017 and again in the middle of 2021. It starts with the most liquid product, which in this case is ETH, and then spreads to the rest of the market. But XRP isn't coming from a place of uncertainty like it did in previous cycles. It starts with being clear, following the rules, and working with world institutions. That is very important. In the past, the biggest problem for XRP was that no one knew if it would be treated as an investment or not. The big players were wary because of that cloud. That thing is no longer in the way. The legal clarity that Ripple achieved has made it easier for institutions to think about it. So Ethereum is the safest bet for Wall Street's crypto exposure right now. But XRP is now the smart bet that can help these companies build the financial rails they want. That will happen when hedge funds and corporate banks start pulling their money out of ETH. Think about what that means for the next wave of liquidity. They're not going to split their money up among different joke coins. They will look for assets that meet their own rules for compliance, settle quickly in the real world, and fit with the next stage of tokenized banking. All three work with XRP. Because of the ETF effect, Ethereum is moving quickly right now. The ETH ETFs have been consistently putting pressure on the buy side, which has pushed demand well above what would be seen from normal use alone. But once that becomes stable, the excitement wears off, and the money starts coming in normally, the market starts looking for growth somewhere else. That's when the spinning speeds up. As gains are locked in, the ETH chart starts to flatten out, and money starts looking for the next asymmetric setup. In the past, these changes have been quick and violent, which is why these next few weeks are so important. As more people join Ethereum, the supply has already started to tighten, gas fees are changing, and staking payouts are getting smaller. That's usually a sign of the end of the cycle. On the other hand, XRP has been quietly reducing the amount of its own supply. Large addresses are building up, exchange funds are decreasing, and the number of transactions is rising along key routes such as the one between Europe and Asia and between the US and Latin America. A liquidity shift would work great in this situation. Traders at large companies aren't waiting for the people to tell them what to do. They work by anticipating. They keep an eye on data that regular people don't see, like open interest in options, funding rates for derivatives, and wallet clusters that are linked to big funds. Right now, those sets of data show that a lot of people are getting out of their ETH positions after making money. That's not just a guess. It's called pattern recognition. In 2021, right before XRP went higher, the same thing took place. But this time, the rules are different. The world's financial situation has changed. The derivatives market is now much bigger and more complex. There are instant settling lines between major exchanges and 24/7 clearing systems. That means it won't be a slow crawl when the switch is turned on. It's going to rain. The speed of cash flow is 10 times faster now than it was 4 years ago. Now things really start to get interesting. This can happen with or without Ethereum going down. A pause is all it takes. When ETH starts to move sideways, even if it's just a little, the systems that control how capital is distributed start to rebalance themselves automatically. Portfolio managers use models to find rotational efficiency. This means that when ETH's performance curve flattens and another asset shows better progress, liquidity moves to the other asset automatically. We now have that built into the system. To make that happen, XRP only needs to be the next thing in line. That chance is very high because XRP has something that almost none of the other top 10 assets do, a clearly stated story about utility that is directly linked to the big trend that institutions care about. Tokenization and cross-border payment in the real world. It's about markets worth many trillions of dollars in payments, foreign exchange, and bond clearing. Those numbers are not just guesses. There are no bigger money sources on Earth than those. Ethereum may be the place where tokens are created, but XRP is where payments are made. That difference is what brings in a lot of money. In his study, Tom Lee said that the way ETH is being used by treasuries is similar to how companies use Bitcoin as a reserve asset. That helps keep prices stable, but it also means that money is getting stuck. XRP, on the other hand, loves movement. Every trade, cross-border transfer, and growth of a liquidity corridor speeds things up. That's why it makes sense for staking payouts to move from being static to active settlement networks. Don't forget about the big picture either. Interoperability will be the next big problem as more and more central banks around the world try out digital currencies. There is no need for 50 different CBDCs that can't talk to each other. It needs a neutral object that can settle all of their values. Ripple has set XRP up perfectly to play that role. We didn't forget about this. It's what their whole environment is built on. So while Ethereum is getting press for its story about compliance, XRP is quietly fitting in with the structure of the future financial system. Big investors start to figure out their possible risk, not just based on guesses, but also on who will win the settlement in the future when they see that. When that story hits a certain point, it starts to reinforce itself. It starts with that for every big rotation. Story plus time plus liquidity. Right now, Ethereum gives the story and the money. When the next window of time comes up, XRP wins. Take a look at the charts from the last rounds. The traffic profile for XRP goes through the roof every time Ethereum peaks. It's not by chance. It's a feedback process for liquidity. Traders call it moving cash. Big funds never put all of their money into one product. They spread the risk around. That is the basics of portfolio management. Even at the current price of XRP, if 10% of the capital in ETH ETFs is moved into XRP ETFs, that would bring in billions of dollars. But that's not all, because people's thoughts change when they can go to stores. People who invested in ETH but missed the run will look for the next ETH. They'll see that XRP isn't just another altcoin when they look at its efficiency measures, how many businesses use it, and how clear its legal standing is. It is the machinery. The next step up for institutions starts with that wave of retail approval. Institutions are based on volume, and traffic is based on accessibility. All of that fits exactly with the big picture we're in. Digital assets are becoming more legitimate, ETF infrastructure is growing, and global payment lines are being re-engineered in real time. All three of these things meet at XRP. That's why we're not lying when we say that the rotation could be significant. There is one point where structural capital, narrative capital, and regulation capital all come together. It doesn't happen often. When it does, the effects change the history of the market. Another thing that most people don't notice is this: the speed at which market stories change hands. Before money moved on to the next asset in 2021, it took months for Ethereum's story to die down. It can happen in days in today's socially driven and automated world. It only takes one news story about momentum, the approval of an ETF, or the introduction of a liquidity corridor for a flood of deals to happen. This is why XRP's strategy is so smart. It's not trying to be better than Ethereum's environment. Instead, it works with it. ETH turns assets into tokens, and XRP settles them. XRP handles the payments while ETH builds the stage. They're not rivals. They're just different stages of the same cash cycle. Ethereum gets the most attention first, and then XRP gets the most success. Right now, every signal is flashing to let us know that we're moving into the second part. Ethereum's influence has risen to almost cycle highs, which is usually a sign of a rotation. The market cap of altcoins that aren't ETH is building a base, which is exactly where previous corrections started. The relative strength measure for XRP has returned to levels of accumulation. Everything is set up correctly from a technical and fundamental point of view. The only thing left to decide is when to pull the gun. As soon as Ethereum starts to stabilize and huge amounts of people start to take their profits, XRP will be ready to go. Lots of cash on hand, governmental approval, and ready institutional on-ramps. Because the fuse is already on fire, it is already lit. Because Ethereum is so strong, it has attracted a lot of money, which is good news. That means the next stage is almost ready. It's possible to track it in real time. ETH exchange inflows are going up as early whales start to cash out their gains. Derivative funding rates are going up, and spot buying pressure is leveling off. These are the first signs of spinning. It's how markets move when big players move their money around. They don't say it out loud. Instead, they slowly move things around until motion changes. These are the same funds that poured into Ethereum when it was worth less than $3,000. They are now carefully looking for the next asymmetric setup, something with a clearer path for regulation, a clear goal in the real world, and a lower relative value. All of those things are true about XRP. It's easy to understand how that shift works. To keep track of performance goals, institutions use automated tools. When the relative value of one asset starts to drop and the value of another starts to rise, the systems instantly rebalance. It's like a big seesaw. XRP's side starts to rise as Ethereum's curve flattens. It's not feelings, it's computer code. XRP isn't going to be late this time either. It's really moving as it comes onto the stage. Regulations that are clear, more transactions on the blockchain, and ongoing global relationships that turn speculation into infrastructure. More than ever, Ripple is connecting more and more routes in Asia, Europe, and the Middle East. The XRP ledger is used to build these paths. That's real demand based on transactions, the kind that lasts long after the hype dies down. Put that together with the ETF trigger now. XRP could be the major event if Ethereum was the warm-up act for Wall Street. Find ETFs and change your access. When regular investors can buy XRP through the same tools they use to buy Apple or Nvidia stock, it will be easy for people to start using it. That's when cash builds up. Retail flow creates volume, volume creates demand, demand brings in institutions, and institutions make the move stronger. We saw the same chain of events happen with Bitcoin and Ethereum. The main difference is that this time the asset has a better use case. People often think that rotation happens at chance, which is not true. It doesn't. This takes place because capital wants to be efficient. Even though Ethereum is a great tool, XRP is better for moving money quickly, cheaply, globally, and legally. In other places, settlements can take minutes or hours, but on the XRP system, they only take seconds. Big players in the financial world notice that level of accuracy when they look at technology for building up finance in the real world. It changes in the way people talk on university panels show this. A year ago, people were talking about how to get more exposure to blockchain. It's now time to talk about settlement speed, liquidity corridors, and being able to work with other systems. Those are the things that XRP is built on. A lot of people will use these apps, and it won't matter who has the most autonomous apps. It will come down to who can handle the most real money going between countries. Ethereum will continue to be at the forefront of the tokenization story. It's an important step in the development. The layer that settles these tokenized deals, on the other hand, needs to be quick, stable, and cheap, because that's what XRP was made to do. Settlement is the next thing that will slow things down as more tokenized assets come online. These could be money market funds, real estate, or company bonds. The next $1 trillion will go to the person who can get that backlog fixed. That's why it's not a question of if Wall Street will switch to XRP, but when. The allocation models will be changed once the data show that XRP settlement infrastructure is ready to handle big amounts of liquidity without any problems. Teams at every big bank are keeping an eye on these measures. Quantity of transactions, trustworthiness of the record, fees paid on the blockchain, and counterparty risk. All of them give XRP high marks. At the same time, the global macro environment is making this change possible. There are more and more transactions taking place across borders, and fast settlement is becoming necessary. The world's financial grid is being improved right now, and most people don't even know it. Infrastructure that runs on or links to RippleNet is being tested by banks, fintechs, and even the government. When they go live on a large scale, XRP becomes the standard way to make global liquidity work. The thing that sets this cycle apart from others is that in earlier cycles, XRP gains were mostly based on speculation and were sped up by investors' excitement and momentum. This time, it's very important. It is based on real deals, real demand, and structural adoption. When money moves from Ethereum's price peak to XRP, it won't just make the price go up. For a long time, it could start a multi-phase run. In crypto, every funding cycle is based on the same plan: power, sharing, and turning things around. First, Bitcoin got all the attention, then Ethereum did. Setting up the next reroute is already done. Technology, compliance, and scale are all things that XRP does very well. The three things that institutions need before they put real money into something. Plus, that cash is bigger than anything stores have ever seen. Just look at how quickly institutional exposure has grown since ETFs were made legal. With just one change to the way assets are allocated, trillions of dollars in managed assets can now move into digital markets. If those same funds chose to invest in XRP-based products, the change could happen right away. It's not going to be a slow, steady change. We're talking about waves of cash that move around every day, measured in billions of dollars. This is the part that most buyers don't think about. Rotations aren't really nice. They don't tell you ahead of time. They happen when no one is paying attention. When most people still believe the present leader will stay in charge. Suddenly, there is a lot of activity in the next asset. As algorithms try to keep up with the news, coverage changes, and within days, the whole story has changed. XRP has been the quiet player, but it doesn't stay that way forever. At this point, Ethereum is getting close to what looks like the beginning of that change. Even though price action is still strong, momentum signs are becoming less pronounced. Traders are locking in gains, funds are reducing their risk, and the XRP chart is tightening up. In the past, the exact setup that comes before powerful moves, the pieces are coming together. There is a lack of new stories about ETH, legal and technical understanding about XRP, macro benefits from improvements to global payments, and a likely ETF trigger soon. The nice thing about this is that the two assets don't go up against each other, they go together. The technology is built by Ethereum. The payment runs on XRP. They are the building blocks of a new financial order. But the capital cycle always goes from the well-known leader to the newcomer. Ethereum has been used up. XRP is in charge of the next part. The next time you see the charts change and ETH taking over, remember that it's not just a random market move. It's the start of moving money around. That's when the basics of XRP meet its velocity. That's when the market figures out where the real savings are. At that point, prices stop moving in numbers and start moving in multiples. It may happen very quickly, even faster than anyone thinks, because this market doesn't sleep like the ones that came before it did. It works on all exchanges and trade pairs around the world and is based on algorithms. Just as soon as the signal goes off, the spinning will start. That's why getting ready is so important. The stage is huge, the players are ready, and everything is set up. The cycle keeps going. But XRP is the star of the show this time. You can find the XRP Millionaire Blueprint in the comment below this video that has been pinned. It will teach you how to get ready for that moment when a lot of money comes in. It shows you the exact method, graphics, and strategy behind what's happening right now and how the best investors get ready for the next rotation. The pinned response has everything you need right there.